Last week we have decided that as soon as we meet for the class, we'll start with the case study on risk and uncertainty. So we'll take up the case now. We'll start with the case study. After that, we'll proceed with the other topics. So from the examination kit, we'll choose one question. We read through that. There's a case on so this is Sweet Cicely. The requirements are the use of pest analysis is one thing. Then it talks about based on this, what's the risk appetite of the investors, and then there's something again to do with what are the three new options for risk neutral investor would choose. Then the question still continues, and then it talks about I think only risk neutral investor would choose from the scenario. Let's take it up. I will also work out another case study on that, but we have to do pest analysis also. So let's take this question first. The content goes like this. Sweet Cicely manufactures sweets and confectionery and has delivered stable but modest increases to the shareholder wealth for many years. Following a change in ownership, the new shareholders are keen to increase the long-term performance of the business and are prepared to accept a high level of risk to achieve this. SC is considering setting up a factory to manufacture chocolate bars. There are three options, 1, 2, and 3 for the size and output capacity of the new chocolate factory. SC must choose a size most suited to the expected demand for its products. There are external factors as well as the impact of the quality, branding, and pricing of its products. Demand for SC chocolates will be influenced by external factors such as consumer taste for chocolate over other sweets and even the suggested health benefits of certain types of chocolate. A high cost ingredient in the chocolate bars is cocoa, a commodity traded on international markets. The market price of cocoa fluctuates with worldwide demand. Due to economic growth, chocolate consumption is rising in many countries where it was once considered a luxury. In some countries, however, governments are considering introducing additional taxes on products containing sugar in order to reduce the consumption of chocolate and confectionery products. Being derived from an agricultural crop, the availability and price of cocoa is also influenced by climatic conditions, soil erosion, and disease. Conflicts and political instability in cocoa growing regions can also restrict its availability. Recent technological advances in the production of cocoa, such as the use of genetically modified crops, promise higher yields from cocoa plants in the near future. You have been asked to help SC choose one of the three options for the new chocolate factory. One board member told you the board proposed expanding into cake manufacturing several years ago. With hindsight, our planning on that proposal was poor. We sold only slightly fewer cakes than expected, but hadn't realized how sensitive our operating profit would be to a small change in demand. The previous shareholders thought problems in the cake business would put their dividends at risk. So SC stopped manufacturing cakes barely a year after it started. The board does not want to repeat these mistakes. We want to minimize the opportunity cost of making the wrong decision about the size of the new chocolate factory. Appendix 1 shows the net present value for the three options discounted at SC's current cost of capital. Appendix 2 shows the expected operating profit generated by the three options. The questions are first, advise SC why decisions such as what size of chocolate factory to build must include considerations of risk and uncertainty, and evaluate the use of pest analysis in managing the risk and uncertainty surrounding the project. Second one talks about the risk appetite of the investor. So let's take this question to the Excel file, and then from there we will identify what are the points about each one, and then answer the question. Like we've done pest analysis, understood the explanation of pest analysis. P stands for political, E stands for economic, social, and technological. The extended format of EL, second E talks about environmental factors, and L talks about legal. But then if it is only given as pest, P and L are taken together. E will go with economic factors and the social factors. Okay. Um, Now we have to identify the political, economic, social, technological factors. Let's keep identifying what are the points here. It's a sweet and confectionery business and has delivered stable but modest increase to the shareholders' wealth for many years. Following a change in the ownership, the new shareholders are keen to increase the long-term performance. So the objective is now to establish the business well and do well in the long term, and are prepared to accept a high level of risk to achieve this. So the appetite of the new shareholders is clearly mentioned. So they have that appetite to take a risk. So they are risk seekers. So what's the reason why they want to take up high level of risk? What's the reason? You there? Anyone? If risk is high, what is the relationship with risk and return? How does return change? If risk is high, am I audible?
Returns are high.
Returns are also high. So why would they want to take a risk? Because they have a high expectation to earn high returns. So they want high profits to be earned. Now, SC is considering setting up a factory to manufacture chocolate bars. There are three options, 1, 2, and 3, for the size and output capacity of the new chocolate factory. So the chocolate factory they want to build, setting up a factory to manufacture chocolate bars. So which size of factory do they want to go ahead with? That is, the sizes are given as 1, 2, and 3. SC must choose a size more suited to the expected demand for its products. So the decision now The first decision here is about building a chocolate factory, but there is no standard size as such they would be taking up, but have to choose among one, size 2, and size 3 models. Then we are also given certain other details about the external factors, as well as the impact of the quality, branding, and pricing of its products. Demand for SC chocolate bars will be influenced by external factors such as, so to build the factory, so what factors are there? One second. Okay. See the external factors. Now, these external factors have to be considered. SC must choose a size most suited to the expected demand for its products. Now, as well as the impact of quality, branding, and pricing of its products. So these are internal decisions. See, pricing again, I mean, depends on external factors, how the competition is, etc. Quality aspects, it's an internal aspect. The demand for SC chocolate bars will be influenced by external factors such as consumer taste for chocolate over other sweets, and even the suggested health benefits of certain types of chocolate. A high cost ingredient in chocolate bars. A high-cost ingredient in chocolate bars is cocoa, a commodity traded on international markets. The market price of cocoa fluctuates with worldwide demand. So one factor what we understand here is the raw material or the main ingredient which is used here in the manufacturing of chocolate bars is cocoa, and then this is a commodity traded on international market. So the price keeps fluctuating. The price of cocoa fluctuates with worldwide demand. So that's one important aspect what we have to look into. Due to economic, as the ingredient, as the raw material prices vary, the price of the main product, the finished goods also will vary. So that's one important thing. Due to economic growth, chocolate consumption is rising in many countries. So the demand for chocolate is increasing. Chocolate consumption is rising in many countries where it was once considered a luxury. In some countries, however, governments are considering introducing additional taxes. So there's another aspect we have to remember. See, governments are considering additional taxes on products containing sugar in order to reduce the consumption of chocolate and confectionery products. Being derived from an agricultural crop, the availability and price of cocoa is also influenced by climatic conditions. Climatic conditions, soil erosion, and disease. Conflicts and political instability in cocoa growing regions can also restrict its availability. Since it is a commodity traded on the international market, any kind of political instability in any of the countries or regions where cocoa is being produced, that will have an impact. So there is one more factor about the political instability in the regions where cocoa is grown. Recent technological advances in production of cocoa, such as the use of genetically modified crops, promise higher yields from cocoa plants in the near future. Okay, so there are many points given with respect to pest analysis. Identify what they are, place them under the respective category: political, economic, social, technological. So there are many things. So point by point, identify that, and then where to place them. Please understand that and then write that. So we will be taking up that exercise as well now. To proceed further, there are 3 options for new chocolate factory. You have been asked to help SC choose one choose one of the 3 problems for the new chocolate factory. One board member told you the board proposed expanding into cake manufacturing several years ago. So there's something about the size of the factory building. So the board proposed expanding into cake manufacturing several years ago. With hindsight, our planning on that proposal was poor. We sold only slightly fewer cakes than expected, but hadn't realized how sensitive our operating profit would be to a small change in demand. The previous shareholders thought problems in the cake business would put their dividends at risk. So SC stopped manufacturing cakes barely a year after it started. The board does not want to repeat these mistakes. We want to minimize the opportunity cost of making the wrong decision about the size of the new factory. Chocolate factory. So now it is connected to a previous scenario wherein they were able to sell only few cakes. Therefore, now they do not want to establish or set up a bigger factory premises or a smaller factory building. They want to go according to what the demand is. Demand for the chocolates would be. Appendix 1 shows the net present value of the 3 options discounted at SC's current cost of capital. Appendix 2 shows the expected operating profit generated by the 3 options in the first year of the project, according to the market price of cocoa and assuming an annual demand of 70 million chocolate bars. So Appendix 1 has the net present value given for 3 options. The option 1, option 2, option 3. So, and if the annual demand for chocolate bars is 50 million, 60 million, 70 million. So, what's the net present value is already calculated. We have the details given to us. If the first size building is constructed, and if the annual demand is 50 million, it is 4, then it is 4 million, 6 million. Then again 6 million for 70 million chocolates demand. Then option 2 has -8, 16, 16. Option 3 has -32, -24 and 17. Okay. Then we have appendix 2. Appendix 2 says Expected operating profit generated by the three options in the first year of the project, assuming an annual demand of 70 million chocolate bars. If the probability is 0.3, 0.4, 0.3, and the market price of cocoa is 2,500, 3,000, 3,500. So there are three options of given for market price. There are three options for the factory building size. So when we look into that, the calculated operating profit for each of the scenarios is given to us. So we see 3.5 and minus 2, 5, 2 and minus 1, 7, 1.5 and minus 2. Let's start with the first one. So we are asked to take up a pest analysis. The first question talks about pest analysis. So as we identify what are the factors, let's place them and write it under the respective category. So we'll start with political. The first thing is political. As we identify, let's place it under the respective heading, political factors. Social factors. Then technological. Consumer taste for chocolates and other sweets, and even suggested the health benefits of certain types of chocolate. Where will it fall? The demand is influenced by these factors. One is consumer taste. Where will it go? Where do we see that?
Social factor, ma'am.
That's right. Because anything to do with the people is a social factor. So you just explain in the examination. I'm just writing in simple terms. You explain that clearly. Consumer taste for chocolates over other sweets. Consumer taste chocolates. Yes, sir. Yes. Next, we see, and even suggested health benefits of certain types of chocolate. So that is also about a high cost ingredient in chocolate bars is cocoa, a commodity traded on international markets. Since there are fluctuations in the worldwide demand, so the prices also will fluctuate. So where will we place this particular thing? The worldwide demand for cocoa. So if it is fluctuating, it's an economic factor. See, anything to do with exchange rate, inflation rate, interest rate, so these will have an impact on the economy, isn't it? So the fluctuation in the prices of cocoa, because they are traded on the international market, will have an impact on their um, foreign reserves also, because this product is being taken up by the um, people in the economy, so they are importing that product. So imports and exports definitely have an impact on the balance of payment, etc. So that will go with the one see, that aspect of fluctuation in the prices of the ingredient which is being imported will have an impact on the economy, economic factor. So that will be taken under economic factor. So the first the point under economic factor is price fluctuation of cocoa as it is. Next, after that, we see due to economic growth, chocolate consumption is rising in many countries where it was once considered a luxury. So the demand for the this particular product, chocolate or cocoa, is increasing. The demand is increasing. So when the demand increases, so the economic activity also gets affected, because when the demand increases, so the productive activity also will be connected to demand. So to produce those products, so there is an economic activity which goes on, so investment is made into that activity that generates employment. Then see, we see that there is an impact on the income availability. Income increases, more income is available in the hands of people. This is all connected to an activity which takes place because of presence of because the demand is present for that particular product. So that increase in demand for a product, see, that is connected to the productivity. So productive activity will see an increase in the investment made into that activity, and that generates employment, that increases the income level. So income availability with the people also increases. So that has an overall impact on the economy. So that therefore it becomes an economic activity. So increase in demand for chocolate. There is an economic growth which is seen because the demand increases. So where when the aggregate demand increases, we see that growth happens. So how do we explain that? So I mean, you must be you must be knowing that see, the demand will give rise to the production. So because there is demand present, when the demand increases, the production increases. So this will result in Production increasing. So when the production increases, the activity starts to produce. So people will have work, employment increases. When employment opportunities are available, people will find work and their income also increases. Employment opportunities increase. And this will in turn increase the income that is available with people. So income increases. So more disposable income will be available with people. So then that will give rise to newer demand for newer products, because more income is available. Of course, serious consequence of this is more disposable income is available, then that can in turn result in inflation. So that is the cycle which goes on. But as of now, because of demand, because of increase in demand, we see that economic growth is possible. And here in this particular scenario also, it is explained that due to economic growth, chocolate consumption is rising in many countries where it was once considered a luxury. So because now this is again a cycle. So the demand for products, now ultimately now it has resulted here because people have more income. So the additional income which is available in the hands of people has resulted in increase in demand for chocolate products, which was once considered as a luxury. See, we also see that if not it is about the chocolates, we see that there are many electrical products. We see that once what was considered as a luxury, now that has come into that category of comfort. See, people having a cell phone was a great luxury. People viewed them as someone belonging to elite group, but now we see that even a laborer worker also now owns a phone. And now the scenario is that they also have the smartphone now. So we see that that cycle of having more income in their hands has resulted in increase in demand for luxury products. Now that those luxury products now move into comfort zone. So this, because of the growth, because of the cycle which happens, because of more income available with the people, they are now able to have consume more amount of chocolates. So this is definitely a economic factor. In some countries, however, governments are considering introducing additional taxes. Now, any decision about tax, it is a political decision. Political, if there is a law relating to that, if there is a regulation relating to that, it is a legal aspect. Of course, now we are looking both the political and the legal aspects together. So any decision about the tax structure is a political factor. So why does the government want to do? So where it was however, governments are considering introducing additional taxes on products containing sugar in order to reduce the consumption of chocolate and confectionery products. So there is a decision from the government side that they want to reduce the consumption of chocolates. So the government also wants to reduce people to reduce the consumption of tobacco products, alcohol products. So consistently every year they keep increasing the taxes on that, but we don't see that there is so much of an impact on those products. See, even if the tax is increased also, as of now, so we see that the decision taken by the government is to increase taxes so that the consumption of chocolate products can decrease. So it is a political factor, increase in taxes. See, being derived from an agricultural crop, the availability and price of cocoa is also influenced by climatic conditions, soil erosion, and disease. So, what do we call these factors as? See, there are certain factors like climatic conditions, soil erosion, and diseases. These things also affect the supply, availability of this ingredient, cocoa, being derived from agricultural crop. The availability and prices of cocoa is also influenced. So where do we fit this into?
Environmental factors.
Environmental factors. So now if it was pestle under E, we would have written. Now where do we write? We can club them with E or S. So we can write it here as economic plus environment. Climatic conditions, soil erosion, and diseases. So these things affect the supply of cocoa. Conflicts and political instability in cocoa growing regions. So conflicts and political instability, we write it under political factors. Recent technological advances in the production of cocoa, such as the use of genetically modified crops. That's a technological factor. Anyway, it's given, and we understand that genetically modified crops can increase the yield, increase the crop. So that's a technological factor. Recent technological advances in the production of cocoa, such as the use of genetically modified crops, promise higher yields from cocoa plants in the near future. So can be taken under technological factors. Okay, I don't write like this in the examination. When you have to explain, please explain that in detail. Now, after considering the pest analysis, how they would affect, I mean, what factors, what are the external factors, and how these factors affect the business and the activity. After we mentioned that, now we have to take up the next question. Now that's 14 marks. So we can see that 14 marks for 4 categories. So um, how many did we identify? 1, 2, 3, 4, 5, 6, 7, 8. 8 points we have identified. Maybe 1.5 marks or something like that would be allotted to each point. explain that in detail. So the overall presentation matters. Mostly write it in bullet points, so that it's easy to identify. If you write it in a paragraph form, the possibility of you repeating the points would be there. Here, if you write it, separate them as bullet points and then explain them. So point by point. So each point, whatever is are the marks that are allotted to that, say one mark or 1.5 mark. So whatever is the situation, so accordingly you will keep scoring marks. So then you will also understand that you should not be repeating the point, and then you've already covered a point. So you will not be repeating that. So don't go for a paragraph form of writing the answers. As far as possible, where you can fit bullet points, go for that and then do that. Clearly explain that, and then easy to score 14 marks. See, the content is already there in the case study itself. Just that you have to identify and categorize them, write it under, present it under the respective heading. That's it. The next question, which is for 6 marks, it says that using the data in Appendix 1, explain which of the 3 options for the new chocolate factory would be preferred by the board and the new shareholders according to the respective risk appetite. Risk appetite, see, risk seekers, risk averse um, investors, then we have risk neutral, then pessimist. So there are 4 categories of investors. So last week we have understood about what strategy they adopt. So we know that. So let's take it up. Let's put Appendix 1, and then I'll do the solution answer here, and then we can take it up. The question is, explain which of the 3 options for the chocolate factory would be preferred by the board and the new shareholders according to the respective risk appetite. Now here we see that new set of investors or shareholders have high appetite for taking up risk. So what is the strategy they would be adopting? So there are 4 things we see. Expected value is risk neutral. Someone who does not go with the brighter side of a scenario. That is taken up by risk seekers, which is called as maximax risk seekers. They are okay. Their attitude is they are optimists. Maximum is by risk averse. They are not willing to take up any kind of risk. They are happy, content with the minimum amount of return. Only considering is that they don't risk their investment. So these are risk averse investors. So they don't they are not optimists. They fall under the category of pessimists, but not on such a severe note. Pessimist attitude is by is taken up by those that see the negative side of a scenario. So pessimist attitude, people choose minimax regret. They are also risk averse. They look at the regret which is associated with the alternatives not chosen. And base their decision on that. Okay, so now the new set of investors here, have high appetite for risk. So what should be the strategy? It would be maximax. What's maximax? See, there are we see there are three options and the three different annual demands for chocolate bars. Now each of them have the NPV calculated and given. We don't have to calculate the NPV. So if they choose option 1 or option 2 or option 3, so now which option? Options here relate to the size of the factory building, because they had not a pleasant experience with cake manufacturing business. So now they want to be cautious about that. So therefore, they don't want to go with a wrong decision. So if at all, if they have to choose the best option, so option 1, if they choose, say in situations where the annual demand is 50 million, 60 million, 70 million, we see that these are the values that are given, 4, 6 and 6. Then option 2 has -8, 16 and 16. And option 3 has -32, -24 and 17. So here in this case, we have to understand this is divided into two parts, maxi, max. Maxi max, the second max talks about the returns. The returns which are associated, these are the returns. So if it is option 1, let's write the returns. Option 1, when we talk about the maximum returns, because the second part of it is maximum. Maximum returns are So once the maximum returns are mentioned, from among the maximum returns, the one which has again maximum, the first part of it is again the first maximum. So maximum among the maximum returns. So this would be option 3. So this is highlighted here. Option 3, that is size of the building as 3, because they see the brighter picture, that is which is a maximum return of 17 can be earned, and they do not see, they are not a pessimist, they are optimists, they always see the bright things. So they have an expectation that if size 3 is selected, then in that case they would be able to maximize the return, and which is 17. So the investors would choose option 3 if the decision is about maximax. Let's say, anyway, because we have started, so let's also look into the, that's not asked, they are only asking about based on the appetite of the investors. Right now the appetite of the investors is maximum return, so maximax goes well with that. But if at all, if we have to do maximin, in that case, see, there are 3 options. So first they would be selecting the minimum returns. The second part of it is minimum. So wherever minimums are there, we go with that. So minimum return here would be 4. Then we see it is -8, and then we see 16 is the other one, and between that nobody would want to earn a minimum return which is in loss. So the next thing is 16. Okay, then comes option 3. Then again nobody would want to go with a loss, because the first 2 options have a loss. So here as well, now here in this situation as well, we see that the investors would go with the choice of option 3. The next part of it is based on appendix 1. The next thing what we can calculate is mini max regret. Mini max regret decision. So a regret table has to be prepared. So we need to now prepare a regret table. The regret table will have the same matrix format. We have option 1, option 2, option 3. Then the demand for the products is there as 50 million. So let's write this one. So demand is 50 million. $60 million. Then 70 million. How to prepare a regret table? So regret table will go like this. See, there are 3 situations where the demand is 50 million, 60 million, 70 million. In that case, so we have to now carefully choose. If it is the first situation, 50 million. So if it is 50 million scenario, what's the best thing that they can get? Let's say if the demand is 50 million, if they choose between option 1, option 2, and option 3, which one is the best one here? It is 4 is the best because the other two are negative. So if they choose option 1, will they have a regret? There would be no regret if they choose option 1 because that's the best thing. So regret here would be 0. Let's say take up a situation where the demand for chocolates is 50 million, and if they take up let's say if they have taken up the decision to build size 1 factory building, then size 1 factory building in a situation of 50 million annual demand for chocolates has a return or NPV as 4. But let's say if they go with option 2, build that, there is a negative NPV of -8, then third one has -32. So which one will be best in situation of 50 million? Option 1 is best. So if they have already taken a decision for option 1 and the demand is 50 million, and option 1 will leave them with no regret. But let's say they have taken a decision of going with option 2 and demand is 50 million. So what is their regret? Anyway, the loss is 4, and they also have foregone the benefit of earning 4. They have foregone with the benefit of earning 4. So anyway, 8 is the loss and the opportunity cost is 4. So here it would be -8. They are also foregoing -4. Okay, so that's their regret. Here in this case, it is -32, and they would have earned a benefit of 4, and now that is also foregone. So their total opportunity cost is -36. Come to the next scenario, 60 million. The 60 million, the best possible thing is with option 2. This is the best possible thing. 16 is the best. So if they choose 16, no regret. If they choose 16, regret would be 0. I mean, if they choose option 2, regret would be 0 because that's the best NPV. But let's say they have chosen option 1 and demand happens to be 60 million. They will be able to earn an NPV of for 6, where they had an opportunity to earn 16 by choosing 12. Now they have foregone 10. 10 is their opportunity cost. So here the opportunity cost is 10 for them. And third situation, in the third situation, we see 17 is the best thing. Now they want to, these are regrets. So maximum regrets, we see maximum regret with option 1 is -11, maximum regret with option 2 is 12, maximum regret with option 3 is 40. So identify what's the regret. Maximum regret is 11 here, maximum regret is 12 here, maximum regret is 40. So from the maximum regrets, choose the one which is minimum. So the minimum regret is with option 1. Mini-max regret rule, isn't it? If it is mini-max regret rule, then they would go with option 1. So the investors would choose option 1. I hope that's clear.
Yes, ma'am.
Then the next one, so that's only 6 months. So we can see that one important point you will consistently note down is wherever there are numerical calculations which are repetitive in nature, which is, the technique is not very difficult. Maybe the lengthwise it is big or small, doesn't matter. See, if there is not much of new content or new calculations included, even if it is time consuming, also there are not many marks allotted. Marks are allotted to analyze the scenario, identify that critical assessment is there, suggestions are there. In that case, more marks are given. The content may look very small and simple also. See, 14 marks are allotted to pest analysis. Technically, we see that pest analysis is very easy. Numerical calculations are difficult and time consuming. See, the weightage here is about not about um, um, the work which is data entry type of work, or work where it which involves a monotonous nature of work when it is done, that is not given important, but something where it has intellectual ability required to analyze the situation, more marks are given. So you need to understand what are those factors right then. You need to know how to analyze the situation, how to advise that, or critical assessment or explanation about that scenario, what benefits are associated with that particular aspect, etc. Like that, if the question is framed, more marks are allotted. So that one point is very, very important. Just because we've done, because generally we go with the assumption that see, wherever calculations are there, more marks can be scored, and they are scoring 6 marks for all the effort what we have put in until now. So 6 marks as compared to 14 is quite less, don't you think so? Then next one, the last bit is 5 marks. This one is about a risk neutral investor. So risk neutral investors, we have to depend on appendix 2, because risk neutral investor will go with expected value. Expected value is calculated as the returns into the probability value. So we have situations given. Option 1, first let's write the probability. There are 3 different probabilities. We see 0.3, then 0.4, then we have 0.3. Then option 1, let's have the NPVs given, because these are all no, these are operating profits given. We need to find out what is the expected operating profit. I'm just writing it as operating profit. The operating profit for option 1 is 3. Then we have it as 0.5. Then we have it as -2. The next one, it is 5, 2, and then -1. Then for option 3, we have it as 7, then 1.5, and then -2. Done. We just have to multiply these things. Expected profit is probability into the operating profit. Add it up. The sum total of it is. So expected value is 0.5 here. And for option 2, it is probability into the operating profit for each of these situations. So multiply that and then take it and add it up. So the weighted average value. Okay, so now based on expected values. So whichever has a highest value, which is option 3. So the if the investor is risk neutral, then option 3 will be selected because it has the highest expected value. So option 3 would be chosen. Okay, done. If time permits, at the end, we can take up another case study on risk and uncertainty. But as of now, we'll stop here. Okay, this is just to test how to take up a case study on where these techniques are used. Fine. I hope it's clear.
Yes, ma'am.
Let's get back to the PPT. Take a break for 10 minutes and then join back at 10:30. And then we'll continue with the remaining class. Okay.
Okay, ma'am.
Last class, at the end, we were doing types of budgets. I have explained all these things. Only ABB was not done. So let's understand what is ABB. So you must be remembering about activity-based costing principles. So no, activity-based costing is used in situations where the overhead costs, which are indirect costs, they cannot be identified with the cost object. Therefore, to allocate these overhead costs, the principles of activity-based costing are taken into consideration to allocate it appropriately so that the cost per unit can be ascertained and selling price can be determined accordingly. So while preparing budgets, also the problem arises with what amount of overhead should be estimated for the future, because see, they are not identifiable. That identifiability is missing. Identifiable with the cost object, that concept is missing. So when it is not possible, then approach the principles of ABC. I understand what are the activities that would be taken up in future and the usage of that cost object or the activity, appropriately allocate the total amount of overhead cost among the products or whatever is the criteria. When the uses of the principles of ABC to estimate the firm's future demand for resources and hence help the firm to acquire these resources more efficiently. So in terms of estimating the overhead cost, when principles of ABC are approached and budgets are prepared, we call that to be as activity-based budgeting. How would they be tested in the exam? So if because budgeting is not a new topic which the students learn, someone who gets enrolled into ACCA program, so at the basic level papers, MA is there, management accounting. So management accounting, there itself the students learn about budgeting and are also tested about the different types of budgets, etc. there. So budgeting concept is not a new concept for students who are taking up APM paper. So after that, even when PM paper is done, at that time also, see certain aspects about forecasting of budgets and all is learned at PM paper, and then the testing is done at PM paper. So to a great extent, preparation of budgets will not be included in the case studies. But that doesn't rule out the possibility of a question where you are asked to prepare a budget. The chances are very less. But then what type of questions can be asked? See, already maybe like in the appendix, there is a budget prepared and provided to us. Maybe we have to even comment about whether the budget that is prepared is appropriate or not. What else could have been included, or what performance indicators would have been best included into the budget, or based on the budget preparation, maybe we have to comment about the performance, whether the performance is up to the mark or not, etc. So that those kind of questions are mostly asked. Okay, I'm not denying that budget preparation will be included in that. Chances would be less. The reason why the chances would be less is because they are already evaluated, they are already assessed based on their ability to prepare a budget in the earlier exams. Now it is not a new thing for them, but at this point of time, because it is advanced performance management, analysis is given a lot of importance. So therefore, analyzing based on already prepared budgets is what can be expected in the examination. Activity based management, that's a new topic. The concept of activity based management, see, when we talk about anything as a based management, activity based management, value based management, so it is I mean, the focus about that particular concept is adding value to some stakeholder. If it is based on activities, we know what is uh, activity based concept. Activity based costing talks about allocating the appropriate amount of overhead cost to the product so that the right cost can be determined. If it is determined, if the right cost is determined, it is useful, it is adding value to the customers, because the right cost, right selling price, and it is adding value because of the right selling price, value is added to the end user, who's the customer here in this situation. So ABM is the use of activity based cost information for management purposes, and they are, what's the customer profitability analysis, value engineering. The concept of value engineering, you must be knowing that, see, where efforts are put into cut down the cost, control the cost, but also taking into consideration that the quality is never compromised. So that's value is enhanced um, by way of reducing the cost, but not the quality. That's the concept of value engineering. So here, when the principles of activity-based costing are used, and they, I mean, with the help of that, if they are able to understand the customer profitability and the value engineering aspects, that's called as ABM, activity-based management. ABM uses detailed economic analysis of important business activities to improve strategic and operational decisions. And the two key features of ABM are able to know what's the appropriate cost visibility is there, and then generation of activity cost profiles. So when the principles of activity based costing are used to understand the profitability situation, where they can add value to the end user in terms of uh, providing the right selling price, and also not cutting down on the quality, the value is enhanced to the customers. Such kind of management is called as activity based management. Conceptually, you can be tested. Maybe you are asked to explain about what is activity based management. 3 to 4 marks can be allotted for any concept which is asked as a direct question. So 3 to 4 marks can be expected. The next topic is, what are business structures? Business structures, here it talks about functional organizations and divisional organizations. The structure of an organization, so generally it depends on the size. So let's say that the size is very small, the organization size is very small. On the if the size is small, the kind of structure, organizational structure which is considered is entrepreneurial structure, which is that size is small, the owner who starts such kind of a business can manage all by himself. So the owner alone can manage, entrepreneur can alone can manage, or maybe a manager is appointed, only he is the investor there, a manager is there to manage the entire organization. So we can call that to be as an entrepreneurial structure. So it's small size, simple, easy to manage, etc. But as the size keeps increasing, we see that it may not be possible to manage all by the entrepreneur, all by himself. He cannot manage it. So then what is done is the work is grouped together based on the functions. Still, the manager or the management uh, is ultimately in control of the um, management of the organization. Everything is under their control, but some kind of grouping of the activities based on the functions. Maybe all production activities are grouped as production function, administration function, selling, distribution, etc. Okay, so then we call this as functional organization. If it is further increased in size, then it becomes difficult to manage by the management. The manager or the management cannot manage it. So then what is decided for such an organization? They are divided into multiple parts. So maybe they are divided into divisions or departments or strategic business units. So to manage it effectively, when they are divided, each division, there is a manager appointed. So the authority is delegated to the manager. So because the manager now will be taking up the responsibility of the division or the department. So to take decisions related to that department, authority has to be given. So authority is delegated. When authority is delegated, based on the authority, he takes decisions. Of course, later on, the accountability also comes into picture. But as of now, the organization is not centrally managed by the management, but it is divided and it is decentralized. The meaning of decentralized is authority is also divided and distributed. So multiple people will have the authority to manage that organization. Such an organization is called as divisional organization. Even if it goes beyond that, also beyond that limit, also maybe they are geographically located in multiple locations, then the sizes are so big that it cannot be managed. They are into diversification, multiple products are produced, etc. So then they consider that organization as a matrix combination. So matrix is maybe location wise, we have multiple locations. Then they are into multiple products. So then product wise, then they are divided. So it forms a matrix form of organization. So we are only just now looking into what if the authority is this is a matrix form of an organization. Now we are going to just look into, see, it is not a very small business, it is a reasonably big business, but the authority is centralized. The authority still lies with the top management. The second part of it is divisional organization. So wherein the organization is divided into departments or divisions. Managers are appointed for these departments or divisions, and they take the decision. So the authority is decentralized and the decision making is taken up by multiple people in the organization, not the centralized management. In such a case, now business structures broadly categorized, we see that they are functional organizations and divisional organizations. So the key point here, what we need to remember is functional organization, the authority is centralized. The divisional organization, the authority is decentralized. It is divided. The authority is delegated to multiple people in the organization. So now, how do we differentiate? What are the points of differences between these two types of organizations? What kind of information is needed in case of functional organizations and in case of divisional organizations? Functional organization, because the top management manages the affairs of the business. If they require information, see, every detail of the organization, if it is provided to the management, it becomes very difficult for them to look into so many details. So mostly it would be provided in a summarized format. Aggregate information is provided in a summarized format. See, data is aggregated at the highest level before feedback is taken. Performance information required by top of the organization for planning and control. The purpose is because the top management plans for the organization, they require information, and that information is provided in an aggregate format. Aggregate data is aggregated and provided. So multiple intricacies or in detail information is definitely not needed. Overall summarized information, if it is provided, that's useful for them to plan for the organization. Now, in case of a divisional organization, now we see that they are already divided, and each division has a manager. Manager has the authority to take decisions, and his purview of decision making is restricted only to his department. So the department to which he is the in charge, he would be planning for that department. So in detail information about that department or division is all what he would be looking at. He would not be bothered about other divisions information or other details. That is not his concern. He would be only looking at his department and his division. So greater participation lower down the organization, information needs to be available lower down organization. So very specifically relating to his department or his division, and it should not be in an aggregate format, but it should be in detail, so that his decisions are based on the information provided and he wants it in detail. Okay, so that is about the kind of information needed by a centralized organization, by a decentralized organization. Now, in simple terms, if we look into that, the main advantage with the centralized organization, see, top management prepares one set of plan that is communicated to others, and they implement that plan. It is easy to plan and implement, can have a better control because they have decided on what is the plan, and they can have a better control over the affairs of the organization. In case of decentralized organization, so planning itself will become a difficulty there, because see, multiple divisions, all of them at the time of planning, see, overall planning when it has to happen, um, multiple opinions will be taken into consideration, because multiple managers are many managers are there at multiple levels. So a centralized plan is not possible. So participation here becomes, in terms of planning, participation becomes very difficult. Agreeing upon one final decision is not possible. And one thing would be there in terms of advantage for divisional organization is, we see that they feel more motivated because they are more focused on their individual department. Okay, they feel that yes, their decision, their feedback is more important for planning, and they feel motivated. Everybody actively participates. So that way we can see that there is better performance in case of divisional organizations. In case of functional organization, better control over the affairs of the business. So that is how we can see. um, Disadvantage wise, we see that functional organizations, the employees or the staff are demotivated because they feel that their opinion never mattered to the management. So their that can result in demotivation in among the employees. That's one disadvantage. See, divisional organizations, because they are too much of time will go in terms of planning. Lot of time will be wasted, etc. Of course, there are other disadvantages also. We will be discussing that in detail now. What are the advantages for performance management in case of functional organization? It says it's easier to assess and control performance of functions. So that's very easy, functional organization. Digital organization, they are divided. So then it becomes easier to look at only their division. So that's an advantage. It is not the overall organization. It is only very, very specifically limited to their division or department. So easier to assess divisional or SBU performance, strategic business unit. Performance management can be tailored to local needs. So they can only focus on their department, division, and take up the work. They don't have to look at the other aspects of it. Problems for performance management. So demotivation is one thing, that is in a generic sense. Then we see the other problems are only the summary, the aggregate level things happen. So they can only know the overall performance, but intricate information is not possible to get. Difficult to assess performance of individual products or markets. So how is that each product is or each department is performing? What is the performance? Such kind of things are not at all understood. Overall, as an organization, whether they've made profit or not, all can be known. But other details about at what level the performance was good or not good, what measures can be taken up to improvise the performance, such kind of information is not available. So product wise, market wise, performance is not known. Another thing is, see, if they enter into diversification, this kind of a management is not at all suitable. See, one management looking into multiple aspects, entering into multiple markets, global market, international market, or capturing various markets, managing such kind of activity becomes difficult. If they keep on adding products to their product line also, it becomes very difficult to manage such kind of business. So that's another disadvantage, problems which arise with functional organization. Digital organization, see, the problem is with too much time is spent on planning. Okay, but then tailor-made planning can be taken up, so that can be looked at as an advantage, even if multiple people or multiple levels at which the managers are involved in planning, even if it is time consuming also, still they can cater to their department requirements. So that can be looked into as an advantage also. See, when they are divided into departments, let's say there is an organization, if it is divided, so let's say each department, each division, a manager is there. Then a manager is given authority, takes decisions, focuses only on their particular department. Their purview is limited to only their particular department. Okay, so everything for their department, they focus on that and then plan for that. But in an organization, there may be other departments also. In an ecosystem, in a in the modern aspect of an ecosystem where departments or divisions, or for that matter even at the organization level also, there is dependence of every entity. There is dependence on the other one, so everybody is dependent on others. Interdependency is there. If within an organization, even if they are divided into divisions, they are dependent on each other. They cannot exist in isolation. It is only for ease of managing that they are divided, but it is an important aspect to understand that all the departments are dependent on each other. Therefore, that point has to be very well realized by the managers. Then later on, we will be looking into performance evaluation also later on. So when the performance is measured, the managers will be assessed based on the performance, certain variables like what's the profit margin, what is the return which they have earned, etc. So those aspects will be taken into consideration to evaluate the performance. When authority is given, along with authority also comes the responsibility, or the accountability also comes into picture. So when they would be very cautious about what is their performance. So in this process of improving their performance, there may be situations where they deny to cooperate with others. So that becomes a major problem. So the first one which talks about is transfer pricing issues. So transfer pricing you have learned in PM, where the output produced by one department is required by another department as input. So in such situation, at what price would this output be transferred to the other department? So the department which produces and sells in the outside market because is called as the selling department. Now, in such a situation, if they have to take a decision about transferring these output to another internal department as input, if they are transferring at what price, because otherwise in normal situation the selling department will be selling the products by adding a profit margin, but for the buying department it will increase their cost, because cost price plus profit will be increased cost for the buying department. So it may not be feasible for the buying department to spend such a high price to purchase the input. So in such situation, what do they do? What are the methods? Of course, we will also be looking into those methods and take up a case study also. So problems relating to transferring the material from one department to another department arises because they would be more focused on their department and refuse to cooperate with the other department. So that is one major problem which arises with decentralization, divisional organization. Then see, they are divided into divisions is one thing. So all the things which are taken up by the department will be accounted. So the costs that are incurred, the revenues that are generated will be accounted for their department. But apart from this, at an overall level, the organizational level, there are certain costs that are incurred, like top management salaries, establishment expenses. So there are certain general costs or common costs, what we call. So they are incurred at the organization level. These costs also have to be borne by the individual department. So the common costs, the organization wide costs that are incurred are divided and distributed among all the departments. So in that case, they may disagree with the share of costs that are allocated to their department. So that is another problem. Who would bear what portion of the total cost is an issue which can arise. That is a problem. Then potential goals with lack of goal congruence. What's this concept of goal congruence? See, goal congruence is when everybody works towards the achievement of the common goal. Common goal is the organization goal. One second. When they work towards the achievement of the organization goal, see, that is called as goal congruence. Everybody has to work towards the ultimate goal of the organization. But now that they are divided into departments, they will have their department-wise goal. Their department, how they want to perform, what is that they want to do. See, that would be a goal at the department level. Then they may focus on their department goals, but not at the organization goals. See, when departments have their goals, they should be in alignment with the organization goals. Theoretically, that is the scenario. See, they can have a goal, but that goal has to go along with the organization goals, in alignment with the organization goals. But if they fail to do so, then that would be lack of goal congruence. Everybody is having their own set of goals, and then they're working towards achievement of their goals. They're not focusing on the goals of the organization. So that is a situation which can be considered as a problem with divisional organization. Okay. So as you read through the case, if there is some information related to the business structures, maybe there is a mention that it is a centralized organization. So highlight the problems that are associated with centralized organizations, or it is a decentralized organization. Understand the advantages and the disadvantages from that structure point of view, and then attempt to answer your, the questions with such kind of inputs. Okay. Then network structure, we see that the the core companies which are into the core businesses, the core business of buying and selling, whatever is their product or service, they are into that. So that's called as a core company. Apart from that, we see logistics companies where they are involved in the material movement, moving the material inwards, outwards, etc. So logistic company, designing of the product process, etc. So we have design companies, manufacturing companies where they manufacture, convert the raw material into finished goods. We see finance companies. Then we have sales and marketing companies. Finance companies provide finance, sales and marketing will take the finished goods to the customers. So have an idea about or knowledge about what are the different types of companies. Conceptually, what is the role of each type of company. Then understand about what are the complex business structures. We've learned one broad category of classification of business structures. We just understood that there are functional organizations and divisional organizations. Apart from that, we also see that there are certain other types of complex business structures. We see joint ventures and strategic alliances. Then we have multinationals, virtual organizations, supply chains, and digital structures. See joint ventures and strategic alliances. These are structures where people from different organizations or different organizations come together to carry on with the activities. So that, see, there is a business done jointly by coming together and carrying out with the activities. See, if they are registered as a new entity, it is a joint venture. Without establishing a new entity, but only to carry out the activities, to carry out the business activities, yes, there is an alliance. It's a strategic alliance, but there is no separate entity as such which is formed. So that's a strategic alliance. Multinational, where the presence is there in multiple nations, that's a multinational organization. Then a virtual organization, it is present as a network of multiple activities. There is no physical location which can be seen, but they are basically present as a network of different activities. That's a virtual organization. Supply chain is a sequence of activities that is connecting from the supplier till the customer. So supplier supplying the material received by the factory of an organization, the manufacturing activities carried on, then they are moved to the warehouses, then ultimately to the customer. So it's a sequence of activities, chain, isn't it? So it's a sequence of activities connecting from the supplier till the customers. So that's supply chain. Digital structure just now we looked into. So the high level of interaction and interdependence between partners makes performance management and measurement difficult. So in all these type of organizations, we see that there is dependence, interdependence of these organizations on each other. So focusing on that, we have to analyze the performance of the organizations in case of these business structures. The next topic, let's see what are the characteristics of services. So there's one case study on service industry. There is one case called as Hallmark Hotels. But straight away today, I will not start because we will also discuss something about other aspects of today, since we've already done one case study. So let's not do another case study today. So we will continue with that, but connecting to that Hallmark Hotels case study is a 50 marks case. It's just not about service industry. Service industry question is only one part of it. multiple other topics are there. So until I finish those topics, I will not touch on that. There is a balance scorecard, or some certain other topics are also there. So let's wait for some time, and then if possible, next Saturday we can do, or else we can postpone it to the coming Saturday. The characteristics of services. There are 5 characteristics of services. The first one is intangibility. Services are intangible. There is no physical form which can be seen or touched or felt or anything. Services that are provided are intangible. Let's say there is a professional providing services. Professional like a doctor providing services. Services that are provided are not tangible. If there is a chartered accountant, so the advisory services provided by a chartered accountant are intangible. If there is a transportation company carrying the passengers or goods from one place to another, it's a service provided. See, that service we are talking about, carrying them from one place to another place. So the service that is provided is intangible. A hotel is there providing accommodation. Okay, see, through a hotel room, that is a different thing. But the service that is provided, that service is intangible. Tangibility is not there. Products are tangible. We can see the physical form of the product, seen, touch, felt, etc. But the services are intangible. The output is not a tangible product. There is not a single measurable output. Intangible factors such as professionalism may be difficult to value. So we cannot see the service that is provided. It is not tangible. Second one is heterogeneity. Heterogeneity is customized. Each client to whom the services are provided, they are not provided as in a standardized format. Products are standardized. Every unit of the product that is produced is similar to the other units. So it's a standardized production which is taken up for products. But services are customized. The same service is not provided to every patient visiting the doctor. The same service is not provided by a chartered accountant. The same distance is not provided to every customer or the load of material that is transported from one place to another place. See, we see that they are basically as per the requirements of the clients or the customers. Okay, so that customization is what we can see as an attribute here under services, heterogeneity or customization. The output differs due to the high level of human intervention, demand for customized services. Another important thing is, as the service is provided, it has to be simultaneously also consumed. If the production is done now, it cannot be consumed in the next period. See, the service, if it is provided, it has to be consumed immediately. As it is being provided, it has to be consumed. It cannot be carried forward to the next period because of its perishable nature. If there is a transportation, there is a bus carrying passengers as on, let's say today. Today's date is 2nd July. If there is a service provided as on 2nd July, as the service is being provided, it has to be consumed simultaneously. July 2nd's service of carrying the passengers cannot be carried forward to July 3rd, and it can be consumed on July 3rd. If it is used on the same date, well and good, fine. If it is not consumed, it perishes. It cannot be carried forward to the future period. The hotel accommodation which is provided as on a day, July 2nd, has to be utilized on July 2nd. The accommodation facility provided should be used on July 2nd. If it is not used on July 2nd, it perishes on July 2nd. It cannot be carried forward to July 3rd. July 3rd will have the occupancy or the vacancy availability based on July 3rd's date. Because it was not occupied on July 2nd, it cannot be carried forward to July 3rd and say that Because yesterday it was not consumed, it will be used on July 3rd. July 3rd will have its own vacancy. The unused facility, the unused services cannot be carried forward to the future period because of the perishable nature. It has to be consumed as it is being produced. Simultaneously, as the service is being produced, it has to be consumed. If it is not consumed simultaneously, it perishes. Okay, simultaneity and perishability. Because it cannot be carried forward to the next period, the next attribute is we see that there is no transfer of ownership. The ownership is not transferable. But products, if they are not consumed now, they can be consumed at a later period. If they are not using that, they can transfer it to someone else also. So that feature is there with products, but it is not available with services. So there are 5 attributes or characteristics of services. First one is intangibility, then heterogeneity, customized, simultaneity, that is as it is being produced, it has to be consumed. Otherwise, it has that uh, attribute of perishability and it cannot be transferred. The ownership cannot be transferred. So no transfer of ownership. Now, the next concept is about business integration. See, the organization as a whole, how do we look at the organization as a whole? What is it made up of? There are 2 models given by 2 people. One is given by Porter. Porter has explained the entire organization in his business integration model, called it as value chain business integration. Another person is Mckinsey. Mckinsey also has explained the organization as a business integration model. He explained it with S. There are 7 S he used and explained it as McKinsey's 7S model of business integration. Um, See, individually, I mean, I will explain both of them in today's class. It will not take a lot of time, very less time. But from the examination kit, see, this is part of this question is part of an essay question, that is a 50 marks case study. Maybe some other time we will take it up, but individually, exclusively on 7S model, there is one case study. We'll attempt to answer that one, at least read through from the exam kit. Okay, I'll first explain what are these models. Business integration model given by Porter's value chain model, wherein Porter has, while explaining the organization, has divided the organization into 2 parts based on the activities that are taken up. The first set of activities are called as primary activities. And for these primary activities to be carried on, there are certain other supportive activities. So first, let's look into the primary activities. Now, this kind of a model is applicable only for manufacturing businesses. See, if it is not a manufacturing business, if it is a service business, it is called as by some other name. Okay, it's not value chain. See, that is called as a value shop. So that's not part of our syllabus as of now. So let's not get into that. But remember one aspect, that value chain business integration model is applicable for a manufacturing business. Okay. So the first set of activities are primary activities. So primary activities, we see them as first one is inbound logistics. The logistics refer to the movement of material. We see first activities inbound logistics, then operations, then outbound logistics, marketing and sales, and services. So these are the primary activities. So inbound or material which is coming into the factory, inbound logistics. So first activity which is required is the material has to come into the factory premises so that the main operation can be taken up. What's the main operation? Main operation is the production of products. So material has to be converted into finished goods. So when the raw material comes into the business, inbound logistics is the first activity. And After receiving the material, this material has to be converted into finished goods. That's the main operation. After the material is converted into finished goods, these finished goods have to be taken out of the factory premises. So usually they are taken into warehouses where the finished goods are stored. And after the production is completed, then the information about the products has to be taken to the customers. Now the customers have to be attracted with their products. So then marketing and sales activities are taken up. They are the advertising is done, the marketing for the products is taken up, the distribution. So if it is, if at all, if it is sold in wholesale markets, retail markets, from there it has to go to the retailer, and from their retailer to the retail customer it has to be delivered. So the whole set of activities where the finished goods are ultimately delivered to the customers. So marketing and sales activities. So the activity does not end with delivering the products to the customers. So sometimes we see that even after the product is delivered to the customers, also there are certain services provided to the customers which are called as after sales customers, after sale services to the customers. Why? Because at the time of sale, there are certain agreements which are signed and agreed upon by the seller to provide certain services to the customers with for a stipulated period of time. So we call that to be as a warranty, or certain other conditions under guarantee. So any kind of a service which has to be provided during that stipulated time period will be taken up by the business. So most of the time it is free of cost, in terms of repairs and maintenance, or in terms of replacement of a component, etc. That's all free of cost. Or sometimes we see that a very minimum charge is charged, but that is an activity which is taken up by the business because of the terms and conditions which they agree upon at the time of sale. Okay, so the primary activities are inbound logistics, operations, outbound logistics, marketing and sales, and then after sales services provided to the customer. But these primary activities are not possible without the help of the supportive activities. There are 4 supportive activities. We see firm infrastructure, technology development, HRM, and procurement. Infrastructure basically talks about the facilities. For infrastructure is facilities. So what are these? What are the things which are covered under infrastructure? Is basically, see, the facilities in terms of all the fixed assets to be provided. We also call them as we can also put this as property, plant, and equipment. If land and premises, land, building, premises, plant and machinery, tools, equipment, etc. When all these things are available, the primary activities can be carried on. So infrastructure is important. So any effort to arrange this infrastructure is part of the supportive activity. So making arrangements for the property. So there should be a land, a building, or premises, factory, building, etc. Those things are needed. Plant and machinery is needed. Equipments and tools are needed. So all of them are part of the infrastructure. So that is important. Those things have to be arranged first. Then the technology which they are using, technological development, advancement, see, all that is part of technology development. See, to what extent did they adopt technology? Did they update the technology? Are they on par with the market, with the competitors, etc.? So those features, those facilities that are provided are part of supportive activities. Next is, see, the work to be carried on, it has to be carried on by the people. So people have to be recruited. So the process of selecting, recruiting, placing them in their job, providing them training, so that the work is carried on. And after they are placed in their positions, then keeping a track of their work and performance, and then based on the performance later on when they are appraised, the rewards and recognitions which they receive, and then their promotion to the next level, everything is taken up by the human resource management. So it starts from selecting the candidates until they leave the organization. Every bit of it, every part of it, if it has to be taken care of, it is done by human resource management. Okay, that's again another supportive activity. Finally, we see that procurement is about procuring the material um, which is required for the main activity. But what is difficult about procurement? See, generally, we do not see that material is purchased randomly from the market, from anywhere. It is not done so, because material is required in bulk quantities, because the production activity is a continuous process. It is usually purchased in bulk quantity, and randomly it is not purchased. So there is a process which is involved. We see that orders, before orders are placed with the suppliers in the market are asked to present their quotations or tenders. So they are asked to submit their quotations. Based on the quotations, where they fill the details about what is the price, the quality, the quantity which they will be supplying, based on those terms and conditions, etc., the right supplier is selected. Then order is placed with the supplier delivers the material. On receiving the material is checked for its quality, then it is moved into the factory premises, then the payment is settled. So that is a procedure which is time consuming. It is not instantly, it cannot be done instantly. Today there is a requirement, by tomorrow the material would be received, is not the situation. It is a time consuming process where they contact the supplier, select the supplier, place an order with the supplier, receive the material, check the quality, and then settle the payment, etc. So it is a time consuming procedure. So the time period which is required from the time when an order is placed until the time it is received is called as lead time. You must have learned in inventory management, lead time. Okay, so there is an activity which is involved in terms of acquiring the material, procuring the material. So that's procurement. Once the material is procured, then the inbound logistics and the other activities are carried on. So all these activities, the primary activities and the supportive activities together are here to enhance the value that is provided to the end user, the customer. Okay, so their focus is on maximizing the value that is provided to the or offered to the customer. So that's the model explained by Porter's value chain business integration model. Then the same thing is also explained by McKinsey. McKinsey has explained this model by using 7S. So 7S, then we see that strategy, structure, systems. Then we have skills, shared values, style, and stuff. So the 7S can be again divided into two parts. The first three are grouped together and made it into one category, and the next four are grouped into one category. The first three, we call them as hard factors. And the next four are called as the soft factors. So the organization is explained with seven factors or 7 points, and all of them are S. We can see that. So what's the strategy of the organization? No, we need to understand what's the strategy of the organization. So strategy, what kind of a plan do they have? What is that they aim to achieve? What do they, what's their goal? What's their objective aim? And to achieve that, what strategy do they adopt? That's about the strategy, the factor strategy. Then the structure. Just now we've learned about structure. So what is the structure of the organization? What do um, I mean what is the style of operation? So is it centralized? Is it decentralized? So it talks about that's the structure which is present in the organization. So that is second is. Third is about the systems that are prevailing in the organization. What type of systems are prevailing? So do we see there is a sorry, do we see that there is bureaucracy in the organization, or there's no bureaucracy? So maybe they work in an environment where cordially they work, and then that levels of hierarchy are not strictly followed, the protocol is not followed. So what type of system is prevalent there? That we have to understand. So that is at the organization level. Then they are these three are together called as hard factors. Then we see that involving the people and the style of working, they are grouped together and called as soft factors. So basically they talk about staff, how many of them are they, um, was there any change in the staff number, etc. What skills do they possess? So talk about, look into the skills which the staff of the organization possess, etc. So skills we have to talk about. What are the shared values? What values do they carry? They possess? See, maybe they are highly motivated, or they require someone to guide them. Maybe they are proactive, or they are not proactive. Um, then we see that as part of shared values, we can also see that maybe they can work in environment where um, they're okay working as groups. That's there, or they prefer to work individually. See what shared values do they have. um, so that we have to identify that aspect of it. The last one is style. What's the style of working? Is it in a free environment, a democratic style, or there are rigid rules and regulations? So um, they have to be strictly followed. That kind of an environment, that kind of style of working. So we need to understand all the 7 factors to understand what is an organization made up of. So what's the strategy of the organization, the structure? The structure of the organization, the systems that are present in the organization. We see skills, shared values, style, and staff. Okay, these are soft factors. We have half an hour time. Um, let's just see if we can read through that and then understand. Um, let me put you to the case study. So we'll read through that. It's a very small question, but exclusively on Mckinsey 7S. It's a 25 marks case. Briefly describe Mckinsey 7S model, which is for 5 marks. Conceptually, what is that concept all about? We have to explain. That's for 5 marks. Using Mckinsey 7S model, analyze the key performance. Then we are also asked about 2 critical success factors with 1 key performance indicator. So that also we will see. But let's read through the case. I hope you're able to see this on the screen. It says BRIGGS was started 5 years ago by Tom Briggs to offer lifestyle and some counseling services online. The company's initial strategy was to grow its share in the market. So there is a mention about what's the strategy. Was to grow its share in the market, and given it had very few employees. So there is a mention about employees. Employees are staff, and its structure was simple. So it's not a divisional structure, it is just a functional structure. Okay. The structure is also mentioned. There are very few formal systems. So very formal systems, few formal systems, mainly because the company didn't need many at this time. Tom adopted a democratic, so the style is also given democratic but chaotic management style. So we also have about style, and attracted experienced staff. So the staff who were appointed were experienced staff who were adventurous and valued teamwork. So teamwork talks about their shared values. Initial joiners were also offered shares in the company to help motivate them. Since then, the company has grown to become a large business with 400 employees and has now achieved a 50% market share in its domestic market. Then initial employees were few. That's one important thing given. Initially, there were very few employees, but now the number grew to 400. So the number of employees are now 400 in the organization. So it grew in size. And now it has 50% market share in its domestic market. The structure, initially it was a simple structure, but now the structure has changed. It is now a well-oiled bureaucratic machine based on functional lines with strong service support. So initially, how they have started, it was a simple, so centralized organization. Now it has moved into a functional lines with strong support. So things are not very simple there. It has changed into a bureaucratic organization. Okay, rules and regulations are in place. They have to follow all of them very strictly. To facilitate this, Tom introduced a new motivation, reward, and control systems based on bonuses and specific individual targets. Recruited experts in different fields and encouraged a culture of enthusiasm and excellence. So Tom introduced new motivation, reward, and control system. So there are other aspects. Earlier, it was a freestyle, democratic. Because it was chaotic, that's a different thing. But it was a freestyle, and the staff were experienced staff. They valued teamwork. Now here we see that maybe they were not so adventurous, and they were not valuing the teamwork anymore. That's why there is a need for new motivation. For them to perform better, there are rewards in place and control systems based on bonuses and specific individual targets. Then they have recruited experts in different fields and encouraged a culture of enthusiasm and excellence. However, Tom has recently become concerned about the following. It says, trust and teamwork have disappeared due to so many new employees. He has been criticized for still trying to run the company as if it were a small business. There is no formal strategic planning process in place. To grow further, Tom is considering expansion into foreign markets. So we need to explain the model, and then with specific reference to this particular organization. Using Mckinsey's 7S model, analyze the key performance management issues facing the firm. Then, so let me put this in an Excel file. Shall we do the case study now, or take it up to the next week?
Ma'am, we can do it next week, ma'am.
Okay. So, did you understand the concept? So we just have to list out, first write the hard factors, write the factors, and then talk about it. We will do it next week. Then write the soft factors and talk about it. There's not much content also. Half a page is there. That's it. That's it. Very small one. But the focus is all on, I can say, 7S model. We'll just do BPR and then wind up the class. Okay. Then the next topic is information, then technology, those aspects we can take up next class. But now we will do BPR. That's the last topic we'll do in today's class, and then we'll wind up. And depending on the availability of time, we'll take up a case study whenever time is available. Because next week we have to deal with one case on Mckinsey 7S model. First, we'll start with Mckinsey 7S model in the next class, like next Saturday. BPR. BPR is generally in an organization, improvements are taken up on an incremental basis. As there is a change happening, according to that, the change in the way the work is carried on also happens. So incremental changes are taken up from time to time because maybe they're growing in size or the customer base is increasing, etc. Sometimes those changes are not sufficient. Maybe they have to change at an altogether at a different level, different pace itself. The way they are carrying on with the business is no longer applicable in that particular situation or scenario. So then they have to think at a radical level. So small incremental changes are no longer sufficient, but they have to think at a different level, at a radical level, so that the work can be carried on at that particular level. So BPR, it talks about BPR is the fundamental rethinking and radical redesign of business processes to achieve dramatic improvements in critical contemporary measures of performance. But why is that there is a need for a radical change, radical redesigning? Why is it needed? See, in organizations where, for example, if we look into that, if the work is carried on manually, see, no matter how many improvements are brought about in that manual work also, it is definitely not a match to the automation, to the to adopting the technology. See, when automation is adopted, we can see that the work is assigned to machines. So the work is carried on by machines or technology is adopted, and then the work is carried on with that. See, if we are talking about those aspects, um, it is definitely nothing comparable. They are not on par. The manual work and then the work which is done by machines are not comparable. See, the reason is there are certain limitations when human beings are employed in the work. See, men can work only for limited number of hours. They require a lot of breaks in between. The speed is also very slow. They become tired very easily. Okay. Um, because the speed is low, the output that is produced is also very minimum. But whereas if machines are put to use, machines can run for longer hours. Sometimes we see that they can be used for 25 by 7, 24 by 7. So all through the day they can be employed. The speed is definitely very high. Because of the speed and because of long working hours, the output produced is also very high. When output produced is high, it automatically becomes cost effective. So that is the situation which, if it is required, making incremental changes is no longer applicable. Then in that case, they also have to adopt technology. They move towards automation, move towards replacing human beings with machines. That is a radical decision. That is not an incremental change, but that's a radical change which has to be brought about it. So then everything has to be redesigned. They have to be re-engineered. So maybe they have to start from scratch, redesign everything, and then start the work of the business, carry on with the business by rethinking and redesigning from scratch. Things have to be taken up at completely at a new level. Okay, that is the concept of business process re-engineering. So not making changes to the process, but re-engineering the complete process is BPR. Okay, automation is the increasing use of machinery, the aim being to increase output through more mechanization. Why would the output increase? Because the speed is very high, long working hours, and because of that, automatically we see that the output that is produced also increases. When output increases, more number of units are produced, economies of scale can be realized. So, more output can be produced and it becomes cost effective. Then rationalization is the reduction in labor in a process of manual work that is being carried on has to be replaced with machines so that the efficiency can be increased. Then ultimately it results in customer satisfaction. Improved customer satisfaction is often the primary aim. Okay. Then we see that there are advantages and disadvantages of BPR. The first one talks about it focuses on the needs of the customer. So to enhance the value that is provided to the customers. How is value provided to the customers? See, maybe quick delivery because the speed with which the production is taken up is very high. So quick delivery, cost becomes less. We'll discuss about why cost becomes less. Um According to their requirement, the products can be provided. See, when at cheaper prices and good quality, quick delivery, these are the aspects we can look into that, and it is focused on the needs of the customers. So it says it provides cost advantage. CBC, it provides a cost advantage is an advantage. We also talk about that the cost aspect of it as a disadvantage also. It says that it is not about cost, it is not a cost cutting exercise. What does it basically explain that? See, when everything is radically redesigned, there is huge investment which goes into taking up those changes. See, when everything has to be redesigned, investment has to be made into technology. So initial investment is very high. So it is a cost increasing activity. It is not an advantage in the initial phase. It is more cost incurring activity. But but the output that is produced is very high in volume. So very quickly they can reach the break-even point and then start making profits. Because the output produced is on large scale, then the cost becomes lesser. That is, it becomes cost effective because after beyond the break even point, the fixed cost does not increase. It is only the variable cost which increases beyond that. So we can see that it becomes cost effective. Therefore, cost advantages can be realized by the business. Initially, it is costly thing. To invest into the new technology, it is cost incurring, but it is cost advantages because very soon they would break even and then they can um, realize the economies of scale. Therefore, it is an advantage. Okay. And then it is not about making incremental changes, but it is about asking radical questions about how the processes can be improved. Not making incremental changes, small, simple changes, but making major changes, radical changes in the organization. Um, Maybe going along with what is prevailing in the market among the competitors, what is the need of the hour, what is the requirement. So looking at that and making changes. So that's about asking radical questions, how changes can be brought about. Then it says it is focused on entire process across functional boundaries. So the entire work is considered, entire processes across the functional boundaries. But one important thing is it is it may not be feasible to implement BPR across the organization in one go. So generally it is taken up as phase by phase the changes are brought about. See, the whole organization to change in one go is lot of disturbance in the organization, because everywhere the changes have to be brought about, huge investment is required. Next, everybody has to get adjusted to whatever is happening around. um, Things may not be clear, they may not understand how to implement the new changes, etc. So that's quite dynamic, that's revolutionary. So it is considered for the entire organization, but general practice is that it is implemented phase by phase. Okay, then anything which is unnecessary, such things can be eliminated. Criticism, it talks about common misconceptions about BPRR, that it is just about making small changes to existing processes. No, it is not about incremental changes, it is about radical changes. It is a cost cutting exercise. Initially it is not a cost cutting exercise, but over a period when the output increases, it becomes cost effective. BPR requires major commitment by the whole organization. Even if the changes are implemented phase by phase, everybody's attention is required. Everybody's focus is there on the on that phase when the changes are brought about. So it requires the focus of the entire organization. It requires major commitment by the entire organization. So need a focus of the on the entire process to avoid efficiency in one department being provided. See, when in one department BPR is implemented, everybody's focus is shifted to the department. So then other departments may suffer. So the needs a focus of the entire process to avoid efficiency in one department being improved at the expense of the whole organization. So everybody is now focused on when the BPR is implemented. Now, if that is the situation, now if the whole organization is focusing on BPR, they may be overlooking the external factors. So attention can be diverted from competitor activities and market developments. That is a danger which is there. This is just not about implementing BPR in the organization. Simultaneously, they also have to observe the external factors. So that may be a problem. Maybe they may not be focusing on the competitors' activities and the other external factors. Now, some implementations of BPR has just been about automation rather than redesign. Instead of redesigning, doing everything from scratch, instead of that, if they just replace men with machine, it is only automation but not redesign. So that is another criticism of BPR. Okay. Quite the content we have covered in today's class. Many topics we've covered. We've done one case study also, but there are some case studies which are pending now. We will have to do about the budgeting aspect. Maybe exclusive case study cannot appear in the may not appear in the exam, but believe me, budgeting aspect will in fixed 50 marks case study especially, um, at least some part of it will touch upon the budgeting aspect of it. So one paragraph, one question, one small area about the answering will touch on budgeting. So be sure about how to answer that concept. Then we've learned about what are the different business structures, the main broad classification also. We've learned about complex business structures, characteristics of services. I told you that we will take up a case study, but maybe after 2 weeks or so, we will take up a case study on services. Porter's value chain is also not, we don't have an exclusive case study, but Mckinsey, we have just now read through that. So next Saturday when we come, as soon as we start the class, we'll answer that question. And BPR. BPR also, there is one case study we can pick it up. Depending on whether we can take it up next week or postpone it to some other day, we will do that. Okay. Next is information, and then we will be learning about various elements of technology. So all that we will take it up in the next week. Any doubts?
No, ma'am.
From last week's attendance, We see only Mohan is absent. The rest of them are all present, isn't it? What's the class size?
It's 7 to 8 only, ma'am. 7 to 8 members.
Okay. The attendance is good. Afshan right now is